Well, I think the issue now is, I mean, we're really past the stage where this was a dollar story. I think this has a lot less to do with the US dollar. It has a lot more to do with how much better the rest of the world is doing, how much more active those central banks are becoming relative to the Fed. And I think that's really becoming the driver of Treasury. So we're in a world where good growth is better for everyone else.
I have another conundrum for you, as it were. Dollar yen moving lower has typically been associated with risk off, and we're not seeing that at all. If anything, equity markets keep going from strength to strength, but dollar yen keeps strengthening, hasn't impacted the Nikkei at all. What is going on there as well? Has it lost its ability to be a risk barometer at this point?
I think that is one of those conundrums, because I think it's part of this unwind of exceptional policies, and we're seeing what that's doing to euro here, and I think we're seeing what the expectations of potentially the BOJ pulling back have started to do there. We're seeing the fact that inflation really getting very close to 2% and perhaps sustainable, but we still have to deal with tax hikes next year. So I think that will still be a big debate in the market. But I think what you're seeing is the Japanese economy strengthening, the BOJ thinking about pulling back on policies they've done to lock 10-year JGBs at 0%, and that's giving you strength in yen that, like as you mentioned, typically that would suggest we're in a risk-off environment, that we're not performing well, when in fact it is exactly the opposite right now.
Is the bond equity correlation coming back? And in an environment where all the correlations have been breaking down, when you consider the 10-year yield is knocking on the door at 2.7, could even make a run at 3%, is that going to be a factor? And why hasn't it been a factor yet that has really upset the apple cart on the equities market?
I think you're going to see correlations continue to kind of break down, or maybe not be as solid as they've been. We can look at the same thing of the dollar and commodities, where those correlations aren't as strong as they've been. I think right now, especially with the protectionist rhetoric that has gotten into the market, with a lot of the political action, we can look and say, well, if we have the State of the Union this week. If we get a lot of protectionist sentiment, that might be weakening for the dollar, whereas or might be strengthening for the US dollar on the back of that with yields falling. Whereas if you then go into better global growth, it means you're getting weakening of the dollar and yields higher. So I think really it comes down to the drivers, and when it's just simple economic growth, those correlations can be better. When it's politics and that side of things, those correlations tend to break down.